This is the trade setup, the journal for March 18th that I took today. So here's the daily time frame. I was anticipating bullish prices. We have FOMC on Wednesday, and Jerome Powell speaks at 9 a.m. on Friday. No news Monday and Tuesday. Today is Monday. Um, we just swept all this liquidity down here, but you can see that we pretty much just turtle souped this. We're almost closed inside of the liquidity. More importantly, we have this order block right here, and we're respecting the 50% of that very well. And we're also inside of this daily FEG. So you can see that pretty much closing perfectly on the 50% of that as well. So I was anticipating this low to be protected going forward until FOMC. So Monday and Tuesday, I think this will be protected, or at least Monday, and that's what I was going in over in my head at the beginning or on Sunday before I took my trade this morning. So the 4 hour, this we had a pretty big move overnight, Asia into London. So we violated this uh, 4 hour bearish for value gap. We also have this order block. And I understood that this high was going to be the draw. We hit that and then we continued to blast through that. So we inverted the 1 hour fair value gap here and closed below these two down closed candles that were the last that took liquidity up here. So now I was anticipating this to act as support, which it did. Price never actually even came back into this. It just used this fair value gap up here first. Mark that out. So I could see that price was bullish. We had our midnight opening price down here, nowhere near price when I took my trade, but that's also another reason that I knew price was going to be bullish. So we inversed the 1 hour here, and so I was waiting to see what would happen. This is the 10 o'clock candle. The 10 o'clock candle swept all of our liquidity. We were inside of that 1 hour fair value gap right here. More importantly, this is a 4 hour fair value gap up here. So I was not just longing that blindly. Now if we look at the 5 minute, this is what I was looking at the time. Took my trade at almost 10 a.m. I believe, but we had this 5 minute fair value gap, bullish of course. Draw that out. Price was inside of that, and these two down closed candles I was anticipating to act as support. So I always enter on the 1 minute, as you know, and all I was waiting for was to see this 3 minute fair value gap get disrespected, and preferably with speed. And in real time, there was a lot of speed here. So if you go to the 3 minute, like we were just on, the fair value gap is unfilled at the time, and off the 2 minute, there's this order block right here. If you go to the 1 minute, you can see that we get a lot of speed right through here. So these are two 1 minute candles. A change in the state of delivery. These are the last series of up close candles that took out liquidity. We're bouncing from this 5 minute fair value gap, the 5 minute order block, disrespected the 3 minute. You can see right here. So this candle wasn't here yet when I took the trade, but actually it was. We leave this fair value gap, and then I was anticipating to see how price was going to continue after we took this 1 minute high, and we continued right here. We continued to displace. How did I know? What does a continuation of displacement look like? Even though that we had that 4 hour fair value gap that we were inside of still. Let me bring that back actually. But we were, even though we were still inside of this 4 hour fair value gap, I was not afraid to take it long because I was not targeting this high. So 5 minute or a 5 minute fair value gap that we're bouncing from, change in the state of delivery right here. We get our market structure shift if you're waiting for this one, which is it's a good idea when you are respecting a 4 hour fair value gap. So this could be your market structure shift, or if you're more advanced, you could wait for this one. All you need is this high to get broken here. You can see the low risk buy was put in down here. We had these fair value gaps inside of here inverted, and that's what I was looking to see what would happen. So you can see how much displacement we're getting through this area on the 1 minute. We're inverting this candle. We're not even respecting the mean threshold of this order block. Actually, we are. If you use the entire wick, I usually just use the candle body, and you can see that we close over the 50%. So all I was anticipating was that this inversion was going to act as support at least up until this high, just because I was not anticipating to hold this trade for very long, just because it is a Monday with no news, and I don't like to target these kind of lone highs like this anyways. More Confluence to add to this trade. I used the first mini distribution leg, and the first distribution leg lined up with the silver bullet zone here, and the 2 standard deviation lined up with this 1 minute high, which was the high that was created inside of this little tiny 1 minute fair value gap. So I entered right here, 1 tick above the CE. My stop loss was at the low of this, or at the high of this candle, so I was risking 14 points. I TP'd at 20 points, and the price ended up going up to this high, but I was not interested in holding for that. I just wanted to get it in and out. I'm perfectly fine with a $400 day on a no news Monday. Did not want to overstay my welcome. I do have to mention that on ES, this is what I was looking at as well at the same time. So you can see right here, this is our high created at 9:35, and here is the new high of day at 10:11, and we have our not new high of day on NQ. So as soon as I saw this, I did move my stop to break even. I did get filled really well, so I got filled at 28 and a quarter. So even if price did want to come all the way back to my entry price, I was most likely offsides. And if I wasn't, I'd be okay with getting stopped at our break even on a no news Monday, especially with SMT at highs. And we're, like I said, we were still inside of this 4-hour fair value gap, so I was completely okay with being risk free. I did not feel like I was jamming my stop loss too early. But that was the basis of this trade. We had a bullish move. I was anticipating bullish prices. We had a liquidity sweep back into the range. You can see this 5-minute fair value gap holding up really well. Down close candles acting as support. You can see candle bodies respecting that. The open really well, and the rest is history, like I already went over. But I hope this video helped anybody, and this is why I took my long setup for the day.